Welcome to COBRA. We're a pro bono initiative co-founded by Schindler's Attorneys, IQ Business and Engaged Business Turnaround. I'm Gary Borachowitz from Schindler's Attorneys. I'm joined, as always, every 2 weeks on the show by Sifiso Skenjana from IQ Business. He's the chief economist, and he's a bit of an in-house economist for us here at COBRA. He gives you the economic wrap for the week. Sifiso will be talking about aspects around the Rand, state-owned enterprises, and the new council that was just formed, and of course the budget, which Mbuweni says he's going to have to restart, rejig. So without further ado, I hand you over to Sifiso to first give us the weekly wrap, and then we'll go on to talk about other aspects. Sifiso, off to you.
Good afternoon, everyone, and thanks, Gary, for the introduction. We're good to go?
Yeah.
Okay. So of course, we are going into Youth Month, and that means that we, ought to have some conversation around, the youth agenda and the youth challenge in the context of the economy, and what options and opportunities that are available for us, and also what are some of the conversations that we ought to be having around that. And so one of the challenges, of course, is youth and entrepreneurial outcomes and entrepreneurial activity. And so I'll get into that particular conversation for today. And that will be preceded by, of course, a very high level discussion around, I guess, some of the things that have happened in the course of the week. And as we said, we heard there's the conversation around the revised budget. Starting there, we heard the minister today coming out so he's expected to present his revised budget, I think, on the 20th of June. And in essence, it's around where that 130 billion allocation is going to come from and where it's going to go, in essence. And so over the period, then departments have been forced to figure out where do they cut to then inform what this revised budget is going to look like. We understand, of course, a lot of it is going to go towards health, and over and above that, it's certainly going to be targeted towards building social resilience into the economic marketplace. And so some of the things that speak to social resilience is these, for example, emergency grants that have come into the marketplace, 350 Rand, as a financial buffer for people who, are without jobs on the back of, the COVID impacted economy. But there are other, I think, social resilience factors. As I said, health is one of them, but also there's going to be pressures on education. There's going to be pressures, particularly on service delivery, given the fact that we are expecting our budget deficit to widen twice as much as what was initially presented in the February budget. And so we're expecting our budget deficit, and simply for those who don't speak this particular language, budget deficit is the difference between what we collect as an economy via tax collections and what we spend. And so when we collect less than what we spend, and that means that the differential then needs to be funded by something. And it has historically been funded then by debt, and that's why we've heard this ongoing story around the rising debt levels in the economy. And so we're expecting then our budget deficit to widen to between 12 and 14% of GDP, and initially was tabled to come in close enough to about 6%. And so that means that, of course, companies haven't been able to operate at the level that they ought to have operated, and that's the thing that informs the reduced tax collections. Over and above that, I have, in many instances, I think, spoken around the concentration challenge in the economy. The 2019 December tax statistics speak to the fact that there were 1,814,000 businesses that were assessed for tax. Only 200 think 204,000 of those businesses actually pay tax, or they reported positive income tax, positive taxable income. And out of those businesses, then only 380 businesses were attributable to 57% of our tax base from a corporate income tax point of view. So when you think about that, that's quite a scary number when speaking to the level of concentration of large corporates in the economy. And so there are 380 corporates that reported tax, taxable income in excess of 200 million. And those are the corporates that contributed to 57% of our corporate income tax base. So that speaks to then, why, when a company like Edcon, for example, or Kome comes under distress, why the impact on the economy is so catastrophic. It's because of this concentration of very large businesses into in the economic structure. And so, then, back to the budget conversation, that means in that, when corporates haven't been able to operate at the level that they ought to have, I mean, our expectation now is that the economy is only operating at about 43% in the real sense, but theoretically at about 70%. And so when you see a lot of the numbers that are coming out, we saw mining numbers, down 43% year on year. And those are the things that are going to inform what we're talking around, and that there's a pressure on earnings of businesses, and therefore there'll be pressure on the taxes that we collect. One of the very interesting things he said this morning, however, Minister Mboweni, was around zero-based budgeting approach at national, provincial, and municipal level. And for those who don't understand or who don't have any context around what zero-based budgeting is, the traditional budgeting approach is that you'd historically use last year's budget and apply some escalation, increase it by 6% or whatever the number is, and that becomes your budget for this year. And then you take that number, you just aggregate it into the activities that you're going to do for the year. And when you haven't done those activities closer to the end of your financial year, and then you accelerate all the projects, you try to spend as much as you can so that you don't lose your budget. Zero-based budgeting, in essence, in a very crude sense, says we start at zero, and then you must propose what must go into your budget and justify it. And so if you want to build roads, put that into your budget and build a business case around it. And so in essence, that will move towards reducing, I think, fruitless expenditure. And also, I think it will result in a lot more grounded and an evidence-based approach to what we ought to be spending our money on. And more importantly, it will enable us, I think, to optimize the allocation of our resources at a national, provincial, and local government level. So I think that's certainly an interesting development there around the country moving towards a zero-based budgeting approach. And I think if Minister Mboweni is able to accelerate that, it should have, I think, real positive benefits for the economy and service delivery specifically. We saw, of course, the rand has strengthened materially, I think, since the lockdown until now. I think at some point it tested the 20 rand mark, and it broke below 17 rand, I think, to about 16 rand 80. And a lot of that was on the back of the fact that the developed economies were reeling on the back of the COVID impact, and investors were looking for alternatives, in essence. The South African rand is the 16th most traded currency in the world, and of those traders, 84% of them are foreigners. And so what's happened is that we saw jobless claims in the US breach the 40 million mark. And so that, and in 1 week at some point, the jobless claims were about 2.1 million people. And the latest numbers have since come out a little bit better. And so it now means about 38 million people have been out of jobs since the the COVID impact on the US economy. And so usually what happens is that when the US economy when what's happening in global economies, I guess, is in the shape that we see it, emerging markets become particularly interesting. We saw in the UK, they're selling government bonds at negative yields. And what that means is, in essence, that you're paying government to be able to borrow their money. And again, for investors, that means in essence, they're getting zero return for their money. So when you look at the long-term yields of our government bonds is quite high. And so again, what we speak of when we talk about the carry trade differential, it's the difference between the yield you get on our government bonds and the yield you get on another economy's government bond, in this case with the developed markets. It means that investors can borrow cheap there and come invest here to get much higher return. And so those are some of the things that have informed the general strengthening of the rand over the last few weeks, and now with the racial tensions again flaring in the US, that's also then talking around, also contextualizing their inability to handle, I think, the coronavirus spread, is also resulted in some nervousness in the marketplace, and that's probably why we've seen a weakening in South African currency, because investors are running to the safe havens. And the last thing, of course, that we saw is that there's a development now around the SOE Council. It's going to be quite interesting to see who is invited to that council and what the mandate of the council is. Conceptually, I think it's right thinking to talk around SOEs in a particular way, in a collective way. But my call has been for some time that we ought to look at SOEs as what we call network industries, and we ought to look at municipalities as well as network industries. And when we talk about network industries, is industries that are enablers for other industries to operate. Right, and so a municipality's mandate, right? And so when you think about what they do when they're doing service delivery, that's network industry type of work. When Eskom is giving you electricity, that's network industry type of work. And so I think the SOE Council, for me, I would rather call it the Network Industry Council. And that way you're able to then drive a coherent approach around what you want to do with rail, as well as what you want to do with your road management or road investment project at a service delivery level. Just enables, I think, as I said, a coherent view of the developmental pathway that you want to approach as a country. But again, as I said, I think theoretically the formation of the SOE Council is quite interesting, and hopefully it will yield some positive results in terms of how SOEs are managed, and also a lot of the challenges that we've seen around the shareholder relationship with the SOEs, and whether or not there's shareholder overreach in the context of the relationship, and say, how do we manage the relationship between the shareholder and the executive structures in those SOEs? So I think those are some of the interesting conversations around what's happened in the economy over the last week and a half or so. And then we'll then, I guess, take our conversation, for the next kind of 15 to 20 minutes into, understanding the youth challenge through an entrepreneurship lens, and also then, hopefully get some ideas from people in the room as well around how ought we be thinking around solving for the youth challenge, specifically looking at entrepreneurship. So if you look at the success ratio of youth enterprise, it's disastrously low. It's about 5% of businesses started by young people actually survive. And so there's clearly something that drives that. And we now need to get into a conversation around what does an enterprise development pathway look like in general. And so in essence, any businesses that is growing and is being developed, where does it start? And so do you start with funding? Do you start with skills capacitation? Do you start with market access? And even if it's not a where do you start and where do you finish, and say, where do you tap into any one of those resources along the developmental pathway? And then when you look at that in the context of youth, I think the conversation's got to be even more specific and more targeted. Say, well, what does this mean specifically for young people? And so in South Africa, we have enterprises broadly. I think about 54% of our enterprises are in the wholesale trade sector, and it's also quite interesting, given the state of our economy, that's probably the one sector that's probably got the lowest barriers of entry. I mean, if you just think about it, if you want to sell clothes, it's quite easy to sell clothes. I mean, how many people have stopped you telling you that they get suits from China, that will be tailored for you? We've seen, of course, that again, the Herbalife guys, they're on sellers. Many people have made lots of money from Justines and selling pots and all of those things. And so it is, I think, one of those sectors that certainly has much lower barriers of entry. And that lends itself then to the kind of enterprise activity that takes place there. But the challenge is that, and it's a South African challenge in general about enterprise development, is that a lot of our entrepreneurial activity has not focused on capacity building. And as a result, a lot of the businesses don't scale and they don't grow because we've tended to take an agency model. So we kind of buy and sell, or we're a middleman in one shape or form, but we're not building capacity. And so, we're not, and I think that's the crux of the entrepreneurial challenge in the South African context. And it, of course, manifests itself particularly with young people as well. And so and as a result, we see the fact that manufacturing itself has been a declining contributor to GDP, over the years. And again, this is conversations we've had over and over again. And the example I make and say, even if it's to say we're going to start with the tenderpreneurship model, and tenderpreneurship is an interesting term in terms of how it manifests itself in terms of social discourse. But if you have a contract to procure, let's say, paper for a department, and so you're buying the paper from somewhere and then you sell it to the department. If I was National Treasury, I would use the procurement structure to ensure that the people who are buying paper from us start to participate along the value chain. And so, yes, you started selling us paper and you make low margin because it's a volume-based business, but then now we want you to participate in the factory. And so we tell the guys who've got infrastructure to say, we need this guy to start having some activity within the factory of making papers. And eventually you work them through to ultimately become some of the providers to Safco, right, which is the forestry company in the country. And that way you're using the supply chain to enable capacity building in the entrepreneurial model in the economy. And so these are things that are certainly doable in as long as we do the right thing in our procurement process and we work those supply chains correctly. And so the thinking around then, even around how a business develops from just an agency type of a model into real, economy participation and real capacity building in the economy, I think those are some of the things that ought to come out in terms of how we truly think around capacity building for small businesses. Over and above that, we look at attitudes and perceptions to entrepreneurial activity in the economy, and only 11% of adults in South Africa have got any intentions of starting a business. And this is quite low, even compared to our African counterparts and our developed economy counterparts. And even if you look at the economic structure, right, and say, look at the compare apples and apples and say, in an economy that's factor-based, and so those are economies that are driven by agriculture, what's the level of entrepreneurial activity that's taking place there? What in an economy that is efficiency-based, which is South Africa. And interestingly enough, it probably shouldn't be an efficiency-based economy, but how do we compare with some of those countries, the Moroccos, etc., that are quite similar in terms of the economic structure? And in an economy that's innovation-based, the Israels, the US's, the China's, how do you compare those again? And so whichever way you're looking at it, trying to compare apples and apples, the intentions for entrepreneurial activity in South Africa are pretty low. And when you contextualize also to the number of adults who think there's good career value in entrepreneurship, the number peaked at about 78% in 2010. And now if you survey the adults in the population, only about 69% thinks that there's a career sustainability prospect around starting businesses. And so it really talks to the fact that also the economy is ailing, but also I guess there's probably a lot of despondency that's going into the marketplace around the lack of efficacy in the interventions that are in place to be able to support enterprise development for young people in particular, but enterprise development in the economy as a whole. And also, if you look at the age groups 25 to 34, the participation there in entrepreneurial activity is still quite low. So it's been trending down, and so I think it peaked at about 14%. So when you think about it, only 14% of the new enterprises coming up were coming from people aged between 25 and 34, right? And those were probably the people who should be doing the most in terms of starting enterprises. And that's declined from about 14.5% in 2015, I think, to about 6% in 2018. And again, that really talks to, the fact that the industry is clearly structurally constraining for enterprise development within the youth cluster, and they're thriving. And so, and so we can continue looking at, as many developments as we want around the youth challenge. We're just going to see more problems around just how much constraint is currently in place and currently in the marketplace for the realization and the growth of youth enterprise. And there's a report that we're currently working on now that's called the Youth Progress Index. And it looks at various, it acknowledges the fact that the challenge to youth is multidimensional. And so it says, it looks at 48 variables, that are social, that inform social outcomes as well as inclusivity outcomes for young people in the economy over time and at a provincial level, so that eventually when we get to a point of saying what do we need to change, what interventions should we put in place that will enable the development of youth, as well as then in extension youth enterprise, you know exactly what you need to target in which province. And so if crime, for example, comes out as materially problematic in the Western Cape, and therefore it means that kids can't walk to and from school, and that means that it reduces their education attainment outcomes, and then you know that you need to target that particular issue in Western Cape if you want to increase the education attainment outcomes. And so and the interesting preliminary results that are coming from this report, and we're going to talk about it next week at our webinar that we're going to be hosting, and you guys are welcome to come join, is that all measures of youth outcomes have been deteriorating for the last 6 years, which is really problematic. And I think really worrying. We see the harrowing numbers where they talk of youth unemployment of 58.1%, between the ages of 15 and 24, And when you look at 24 to 35, I think it's 37%. And again, whichever way you cut, the cake, you see that the constraint to youth participation in the economy is really constrained. And so then the call then to action is that let's understand the number of the multiple variables that inform the mobility and the access of young people. I mean, one other report that I was looking at just the other day suggests that it would take about 22.9 years for a person who is in essence born into poverty to become in the upper quartile of earners in the economy. And so it speaks to the inequality constraints that exist in the economy and how it continues to remain pervasive. And so all of these things are important contributors to why we don't have colorful youth outcomes, particularly in the development of youth enterprise in the economy. And so I think, what's going to be quite interesting and what's going to be quite important as we progress and we continue to start to analyze the real youth issue beyond funding, right? And I keep saying that everyone wants to throw money at the problem, but you can't throw money at the problem when the problem itself is multi-layered and it's quite complex. And so we've got to start thinking around, enterprise development, as I said, as a networked or a platform philosophy, and not necessarily a platform business, but a platform philosophy that we've got to use those opportunities to be able to see how industries interact, marketplaces interact, and all the participants interact to ensure that the right capacity is built in the economy. So that's the bit that I really just wanted to start to bring into this conversation. It was really just zooming in and saying, what are the challenges to the development of youth enterprise in the context of the South African economy? What are some of the numbers that we see in terms of where enterprises are being established and in which age gaps, and what are the things that are, contributing to the low, I think, enterprise development that we see from young people. And of course, the last conversation is around the value trap. And I call that the value trap around the perception of value that you'll think you'll get from a job and the perception of value that you think you get from starting your own enterprise. And the challenge is that when you've got too many people who are hungry, the first thing they'll run for is some stability. And then they remain in their value trap because then they don't have space to think around what starting enterprises would actually look like and what they would need to do. I think also the corporate culture in South Africa is quite restrictive to moonlighting, and moonlighting in essence is running what other extramural entrepreneurial activity you want to run outside of your primary work. You'll find in the way in which HR policies are written, etc. Again, it is quite restrictive for people to want to explore various avenues outside of their primary employment. And that in and of itself, it entrenches the value gap and the substitution effect between wanting to sort youth enterprise as well as remaining in employment. And now when you've got an economy that's had jobless growth for 12 years, it becomes even more problematic around this conversation around, the job market itself, as well as then the value that you may be able to realize if you start your own enterprise as a young market participant in the economy. And that's my bit, Gary.
Yeah, sure. I think let's talk about the youth first before we go on to the other aspects and then have a discussion. You said 5% of all businesses started by young entrepreneurs fail. Just give us a couple of reasons why that is. Why you think, very, very succinctly, why you think that failure rate is so bad.
So there are a number of reasons. The one is market structure. So there's South Africa's got what we call a Herfindahl index, which is a measure of industry concentration. We've got the highest Herfindahl indices at a subsector level in the world. And that means that we've got some of the most concentrated industries or oligopolistic industries in the world. And what that results in is that it results in anti-competitive pricing. It results in market dominance and market abuse issues. And that's why we've got the Competition Commission, Competition Tribunal, Consumer Commission, and all of those that are aimed at starting to solve some of these things. And I mean, if you just look at, you know, the Consumer Protection Act only came in 2012 in South Africa, right? And so just how businesses have been able to use contracting to be abusive to consumers. And so we see the same thing in how small businesses then get elbowed out by large corporates, and therefore the market structure in and of itself is restrictive. And that's a very big thing in South Africa. And it certainly needs the right level of attention. And what we're hearing now, of course, Gary, you'd be closer to that conversation, is around, you know, giving the Competition Commission teeth to prosecute. And because now the process that, you know, that they need to go through before, you know, corporates are held criminally liable for some of the activities is quite arduous. So, so I guess there's positive developments, but I think the developments themselves are not fast enough towards making the marketplace enabled. I'll make an example also, and I won't mention the retailers, but anyone who wants can really just Google it and it'll come out. But the top retailers in the country are now opening spaza shops in the townships, right? And these are 100 square meter spaza shops containers. And so you're taking a market that's already under immense amount of stress, given the fact that now about 58%, for example, spaza shop owned in South Africa are owned by Somalians. And a lot of the previously existing spaza shop got outpriced primarily because the incumbent Somalians were able to find cheaper price points. And those price points were achieved through various mechanisms, some of which were achieved through, for example, counterfeit goods, but others they've been able to do bulk buying. So you're looking at a market that was servicing households already under immense amount of distress, immense amount of social pressure, social distress in the context of the xenophobic attacks that we saw. And then now you want, you know, retailers to go set up their own spaza shop model there, and that if you want to come in, you have to franchise, right? These are some of the things right after actually the Competition Commission had released a report speaking around the fact that, you know, the relationship or the activities from the large retailers in the South African context has not been in favor of the development of the retail industry. And in essence, that there were issues there that needed to be solved. So market structure is certainly a huge thing in a South African context. Over and above that, I think it's the network, right? Again, when I talk about the network, it's what are the things that touch a business, right? Is that, does a business have access to legal services that enable them to be able to read and understand the contracts earlier upfront? Many law firms will, you know, charge you 3,000 Rand for a contract that they're taking off the shelf. You know, and these are some of the things around, you know, professional services that are quite interesting around what does it mean for professional service to truly be value adders in the context of the economy, and how do we think of value in the context of some of these the firms and banks included. And so does a small business have access to a legal firm? Do they have access to the right financial vehicle? Most people take personal loans to run a business, right? And that's a lot more expensive than running that through a business. Do people understand that debt is tax deductible if you run it through a particular business structure that makes it more optimal for you to manage your capital structure? The whole lot of these things that are not necessarily intuitive things that one would wake up knowing unless you've got the right ecosystem around you to help you understand all of those complexities. Over and above that, it's things like, how do we institutionalize mentorship? I mentioned the challenges to income convergence in the country of that being 22 years, right? And so, which means a lot of people who are starting enterprises probably don't have any social capital. And therefore, you know, what does it mean for us to find ways of institutionalizing mentorship where it doesn't need to be a one-on-one relationship between a business and a mentor, but in a way that the value that comes from mentorship itself can be institutionalized, that people can find ways in which in bulk or in volume businesses can access those value points. And so I think all of those things certainly contribute to the challenge and the complexity of enterprise success, and of course their ability to get into marketplaces.
Yeah. So was that the percentage before the onset of COVID-19, where these entrepreneurs were struggling with their businesses? And I assume it's got worse since the onset of the lockdown.
Yeah, so that was the percentage before, and Stats SA has got a report that studies the COVID impact on small businesses or on businesses in general. And you'll be able to see there that there are quite a few businesses at some point, you know, during lockdown level 5, in the wholesale trade sector, I think it was 50 odd percent of the businesses that were not going to operate again, right? And when you think about that, that's pretty hard in terms of the impact that would have on businesses. And so there are many businesses that certainly have closed shop, and they just won't be able to open again. And so that number is certainly, you know, going to get worse once we start to see the real numbers coming out of just how hard the COVID impact has been on the sustainability of businesses.
Are there any government programs, grants, or programs that the youth in entrepreneurship that perhaps people watching here or generally could look into?
There are about 98 programs and initiatives in the country that speak to that, and they come in various forms. And I think if you just Google, trying to remember, if you say enterprise development, small business enterprise development incubation or something along those lines, you'll see there is a list, and that list is showing about 60, but there's about another 30 that's not listed there. And that goes from, for example, some of the big SOEs, like a Transnet, helping businesses within their supply chain. Some of the mining firms have got some development, enterprise development services. And then of course there are funds, you know, from the NEF, from NYDA, etc. And many people have complained that, you know, the process to be able to get those funds is so arduous. And a lot of them have got crazy requirements of, you need to have been in operation for 5 years, and you need to, you know, show proof of sustainability. But again, you know, we're trying to get seed funding here. And again, maybe the question is, you know, what's the opportunity for impact investing to be a key player in the seed funding process for small businesses? And I think that's probably an important question that we ought to be asking a lot of the funding market participants, because in a fund structure, you're able to pull out your risk. And therefore, that's why impact funds now exist, because they've got in essence, a lower cost of capital, which means they've got a higher risk appetite. And so maybe these are some of the things that we ought to be thinking around now, saying maybe those are the kind of financial vehicles, and not these loan structures, business loan structures that are incredibly prohibitive in and of themselves. For those to be the funding, I think, you know, vehicle for businesses to grow and to remain sustainable. And as I said, is that the interesting thing in the companies like Race Corp, for example, who look at enterprise development also through the skills development lens, and say, we've got to take our business owners through certain development processes for them to understand and to be capacitated with skills in order to know what to do with running a business. So all of these things, I think, are encapsulated in the various programs that are in the marketplace, both from government and private sector. And I think the question that or the thing that's not being solved for in the market is that how do we aggregate those and bring them into one place? I think the COBRA platform is certainly quite an interesting value proposition around how you eventually create a marketplace for businesses to find various levers and various levels of support at different levels of distress that they find themselves. And so I think conceptually the COBRA model is probably quite an innovative one in the context of the economy, where it's starting to bring all of these market players who are providers of some level of assistance to businesses, bringing it to one place. And I think we should see more of that in the economy as well.
Yeah, I mean, you bring up COBRA and its ability, and that was my next question. COBRA will assist businesses to pivot into the right spaces, into the right areas. As an economist, are some of these entrepreneurs perhaps focusing their energies in the wrong sectors, in the wrong areas? And perhaps with COBRA, we can assist them to focus their energy in the correct sectors, in the correct areas, so we can have a better percentage of success stories.
Yeah, I mean, so as I was saying, is that South Africa skipped a growth phase as a country. The normal process is for a country to go through an agrarian process, and so that's a factor-led economy, and that would be very primary sector-driven, agriculture, farming, you've got mining, and a whole lot of the stuff that happens in the primary sector. And then you get into the industrialization process. And so South Africa started deindustrializing 2000. And that's one of the reasons why we've seen declining manufacturing capacity in the economy. And so now we see ourselves as this efficiency-led economy, and where services is now starting to become a larger and larger contributor to GDP. But a lot of the things that we needed to have put in place upfront are not in place. And so even in the context of the question you're asking, Gary, around pivoting, maybe there's real value in the primary sector, right? And that's where we're missing the gaps, right? We won't even think about the fact that a small town in the Eastern Cape, Berkeley East, sells the most wool on the continent, right? But it's an understanding where the value opportunities are if we are to take advantage of these pivot opportunities that exist. I made on this platform the example around beer bread, but there's another example again, which is also quite interesting, which is around the banana cake bread or banana bread example, right? And that one looks and says, if we know that there are food merchandisers or food hawkers that sell fresh fruits on the side of the road every single day, and they depend on that fruit being sold for their own livelihoods. If you're a government and you know that there are, for example, companies that are ready baking companies, why don't you facilitate a mechanism through which all of the hawkers, once the bananas go ripe, because a ripe banana is got a high sugar content, and that's what we use for banana bread. Why don't they offtake what would otherwise be wasted bananas into the marketplace for the creation of banana bread? What that becomes is that you do that enough times across the entire economy, South Africa will probably be the largest banana bread maker in the world. And it's small deliberate acts that sometimes lead you to become a market leader, because eventually you start to understand certain things, and so even as a business owner, I'll make an example, is that we often think about innovation in very complex terms, and sometimes it's really in understanding, truly understanding the craft that you're in. I say, if you're selling fed cooks, Are you able to close your eyes and know which flower you're touching, right? Because that's the kind of thing that will enable you to know the kind of flower that makes the fluffiest magwinyas, right? And before you know it, now there are guinya tastings that are happening throughout the country, because now there's one flower that makes a sweet guinya, the other one makes it more savory. But this is the pivoting that becomes quite valuable in how you think about the entrepreneurial process. But it's not always this, you know, tech-led innovation that must drive your approach to be innovative in how you manage your businesses and how you manage the marketplaces in which you occupy. And so those are some of the things that we really ought to be thinking about, even as business owners, that your opportunity to innovate is closer to you than you think. It's actually really in your immediate environment, and take advantage of that. And that's the thing that's going to be an enabler for you to be able to remain resilient in tough market times.
Yeah, I mean, I watched a webinar with Simon Sinek. I don't know if you know Simon Sinek, and he spoke about, let's not conflate small business owners and entrepreneurs. And that's perhaps what the problem is. Not all small business owners necessarily a good entrepreneur. And I think a lot of our issues are systemic, and we can see that there's problems structurally. But perhaps our entrepreneurs and our small business owners, as you said, are not good enough at the moment. That's why you're saying they're not coming up with innovative ideas, as you say, with regard to bananas. So do you think we need to improve also and become better entrepreneurs?
Well, you know, and the question would be around what is, you know, what informs that, right? What would make us our better entrepreneurs? And you know, the simple answer is yes, we absolutely have to become better entrepreneurs, but we must also understand the things that lead people into entrepreneurship and the kinds of entrepreneurial enterprises that are there. And so I don't think we should have one kind of entrepreneurial enterprise. I think, you know, there are livelihood and sustenance-based enterprises, right? And say, I'm selling fruit so that my kids can go to school. That's literally the only reason why I'm doing it, and that's also okay, right? It need not be that the person who sells fruit needs to aspire to ultimately make you know, pulp, juice, and sauces out of their apples, and eventually, do you know what I mean? They don't need to aspire to be agribusiness owners. But what we ought to do is understand what it means to create a conducive environment for any type of business to flourish. So whether you're a high growth, innovation-led fintech, is the environment sufficiently conducive for you to flourish? If you're a niche venture type of business and you know you are able to turn tires into some, you know, renewable thing, are you able to operate sustainably in the environment that we're in? If you're an on-seller, you know, beyond just finding, you know, more Herbalife people to sell to, but are you able to, you know, to not be chastised by your employer if you put your Herbalife box there by the entrance, or whatever the case is, right? But the point is that it's important for the market itself and the space itself to be conducive for whatever kind of enterprise to be sustainably operable.
Yeah, let's take some questions, Sifiso, from Nukule Kele Zondo. I don't know if you've answered the question, Sifiso, and she's a small and medium term, she's a small operator, and she says, can, you know, what are our prospects? I think you've answered that question pretty much, but we've got huge challenges with reduced economic activities. What do you think can make us SMMEs prosper? What can we do to succeed even post-COVID? I don't know if you've answered that question, or maybe you can reiterate it for us.
Let me just read it quickly. Facing market challenges, SMEs, reduce activity. Yeah, so I've partially answered the question in that, you know, you've got to be able to sweat your assets. So look at various ways in which, you know, you can create a productive base from what you currently have, or create a cost-cutting base from what you currently have. But over and above that, I see that you're in the IT space, and I mean, that's a growth industry, right? Schools are figuring out how to do this at-home learning, for example. They haven't understood what are the tech manuals that need to be there. We're finding that, for example, now is it Zoom that's now been first to market in terms of being able to bring noise clearing technology around the video calls. But the point is that there's opportunity at your door every single day. It's just you've got to look hard enough to, and you probably don't need to invest in any more assets than the ones you have to be able to start to engage those conversations in other subsectors that certainly need that, right? We know warehousing is going to be a growth industry now, and technology is important for warehousing. So are you thinking about, for example, so who's currently doing warehousing, who's going to need warehousing, where are those warehouses going to be established, and how do they manage the flow of inventory, right? And then you can bring your technology there in one way or another. But this is the question that we ought to ask all the time, because marketplaces change, right? With or without COVID, there's always going to be structural shifts in economies, right? And Kodak will tell you about that. And so what do you do? And so I think it's certainly around asking yourself is that what kind of sector is still able to grow in this kind of marketplace, and how can I plug into that particular sector?
Yeah. Then there's a question from Jason Frichel. Is there a solid projection forecast regarding the unemployment rate? Is it 50%, he asks?
So we did our own assessment. We're modeling that the economy is going to contract by 33.9% in the second quarter, and that it'll contract by 17.9% for the year 2020. What we speak of as elasticity of output to employment being one is that there tends to be, particularly on the downside, a one-to-one correlation between reduction in output and reduction in labor force. And that would then attribute itself to about a 2.9 million job losses for the year. And that's the base case. At best, we expect the economy to contract by 10.8%, and that would be attributable to about 1.7 million jobs. And so in essence, the range you're looking at is somewhere between 1.7 and 2.9. And that's certainly, I think, something to be really worried about in terms of the extent of the impact on the labor force that this virus is going to have. TransUnion's also done their research, a survey right now, and of their survey participants, already 14% are without a job already. And so we certainly saw the first wave come in, and I think a lot of the second waves are going to be a lot more aggressive. As I said, we saw in mining that the quarter-on-quarter, and that's April, not even May. The April quarter year-on-year decline was about 43% in production. And that's material in terms of the implication that we'll have for that particular sector. And where you've got more elementary work, and so that's wholesale trade, that's construction, that's household services, that's got a lot more unskilled labor. That's where a lot of the risky labor force is certainly sitting. And we're going to see that certainly come into the marketplace as the year progresses.
So we've got about 3 minutes to go. Let's throw forward to the week ahead. What do you expect to see? What do you think your highlights will be this coming week?
So next week we're going to see a lot of politicking around the Youth Day thing, and so there's certainly a lot of youth events that are going to be going around. We've got our own, as I said, on Thursday 11 o'clock we've got our Youth Progress Index launch. So we're going to launch that particular report. We've got some interesting participants from Social Progress Imperative in the US. We've got, Yes for Youth coming on to that. We've got VETS, on the digital skill side, and a couple of really interesting participants, moderated by Gugu Mfupi from KFM. And so it's going to be really interesting, webinar to really start to look at the complexity of the youth challenge. And so I think that's going to, be quite an interesting feature in the month, is certainly Youth Week. And over and above that, as I said, we've got the budget that's going to come from Minister Mboweni, the revised budget. And I think, it's going to be quite interesting to see, where money gets taken from and where money goes to. And so I think those are the two things to look out for in the coming week, and those should be quite colorful.
Sifiso, thanks a lot. I really appreciate it. Sifiso Skenjana, Chief Economist from IQ Business, part of the COBRA ecosystem, which is a pro bono initiative co-founded by Schindler's Attorneys, IQ Business and Engaged Business Turnaround, where we offer advice, legal, accounting, economic advice, turnaround advice to all companies who are in financial distress due to COVID-19. Join us next week. We've got a full program. We won't be broadcasting on Tuesday, but Angela Aubry is here on Wednesday. Rich Mulholland will talk to us on Friday, well-known people at the top of their industry. So look out for all our webinars. Go to our website, COBRA, www.cobra.org.za. Until next week, cheers, guys.